Hello traders, I hope you're doing well. In this video, I'm going to run through multi-time frame analysis, how we start and build our trade ideas from the weekly or the daily time frame and refine our entries down to the lower time frames to get the maximum risk reward. Let's start off with Australian dollar, US dollar on the weekly time frame. As you can see, we have our weekly low down here, and we have a weekly swing high here. Now, as we've broken this weekly swing high, then we have turned into a bullish high time frame uptrend. Let's mark our market structure break and let's get this weekly low out the way. And as you can see, we are breaking multiple levels of structure on the way up. We're clearly in an uptrend on the weekly time frame. Let's drop down to the daily time frame and see what we're doing. So, as you can see on the daily time frame, we are also making higher highs and higher lows, and we are clearly in an uptrend on the daily time frame as well. Now we are doing a series of mitigations on the way up here. We are breaking structural highs. We're coming back, tapping to an order block. Moving, breaking structural highs, pulling back, tapping to an order block. We'll go to recent price action. And I'm just going to do a bit of a case study and just show you really how we can frame up our trade ideas from a higher time frame down to execution point on the low time frames. As you can see, we have a daily order block here, and the reason we can identify this as the daily order block is because we have a market structure break to the upside. Here we look for the last sell candle before the buy. That breaks market structure, and as you can see, there is also some inefficiency and imbalance just rest and above. Let's go down to the 4-hour time frame and see if we can refine our order block and start to frame up our trade idea. Now, as you can see on the 4-hour time frame, we are actually bearish. This is our daily high up here and a daily low here. On the daily time frame, this is what we would call a complex pullback. Now, although we are bullish on the weekly and we are bullish on the daily, both in a clear uptrend with some momentum, you've got to understand for price to reach these high probable daily or weekly demand zone or order blocks, we essentially need to be bearish on the lower time frames in order to reach this point, which is our high probability long zone. Now you can capitalize on shorts down to this level, but again, just for the purpose of this video, I just want to show you how we utilize the high time frame trends and trade with that to maximize our reward. As you can see, we've tapped into our daily order block. Now we can refine this 4-hour order block in one of two ways. This would be the last sell before the buy. As you can see, we do have some inefficiency just above it. What we can also see as well down here, that we have another order block, which is really the origin of the move that really drove price to break market structure. You could draw an order block here, but we could also refine it down to this candle. But I will include the wick because if you were to look on a lower time frame, what you'll find is when you do have these liquidity spikes or these large wicks, essentially is an order block on a lower time frame because we're on the 4-hour time frame. This may be a 1-hour or a 30-minute, or even a 15-minute order block, which you will be able to build your trade idea from. I do like to include the wick when I'm framing up my high time frame order blocks. Trade forks and cryptocurrencies with the lowest spreads in the industry. CoinEx offers an efficient trading environment to its clients that reduces latency and improves trading efficiency. When you trade with them, you gain direct access to the world's deepest liquidity pool aggregated from a network of Tier 1 banks and prime liquidity providers. Number 1 on my list for CoinEx is that my withdrawals are on point. Never had any problems. 100% deposit bonus. Double your trading margin, double your trading performance. As you can see, we have mitigated this order block and we've rejected it twice. It may hold from this level, it may not if, so it may come down to this order block below. As you can see, prices come down and it's rejected the extreme order block, the origin of the move. Once we have tapped in and mitigated at least 50% of the 4-hour order block, I would then drop down to the 1-hour and see what we're doing there. Now, as we've had full body candle closures below it, once we have candle closures below this order block, I would class this as no longer valid or mitigated. What we'd be looking for is a break of market structure to the upside. On the 1-hour time frame, because we are trading from a higher time frame, we don't want to be just looking for 5 or 15-minute breaks of structure from these high time frame points of interest. We want to see some commitment from at least the 1-hour change in trend, changing to bullish, to go along with the high time frame idea, which is clearly sitting an uptrend. As you can see, we've now broken 1 hour structure. Now on the 15 minutes, this would be more visible as a swing in the market, but it is a solid engulfing candle. We can class this as a pullback and a solid break structure. Once we've broken the 15-minute and that 1 hour breaker structure, we then look for our 1 hour order block. As you can see, our order block here is the last sell candle before the buy that breaks market structure. Now, I know this looks quite sketchy, but we do start to see some full-bodied candle closures above this high. I'm quite happy to look at this area of interest and not essentially take a trade or risk entry directly from this, but more so just keep it as an area of interest and monitor price action to see how we react from it, to try and build our lower time frame execution point. So, now we've mitigated and tapped into our 1 hour point of interest. I then drop down to the 15-minute time frame. As you can see, we have tapped into our 1 hour order block. We've broken the lows. We've now mitigated 50% of this order block, and there we have our 15-minute swing high break. This would have been our swing low and this would have been our swing high, clearly a pullback, a swing in the market. We've impulsively broke this market structure to the upside. Now this is showing me that we are starting to change direction on the lower time frames, which is great. It's starting to align with daily and our weekly time frame bias. So again, we map out our 15-minute order block. We look for the last sell candle because we're looking for a bullish order block before the buy. So now we have our 15-minute order block for the purposes of this video. I'm going to use our first entry method, which is a risk entry. Essentially, we can front run it, or we can use the 50% equilibrium point. But again, I'm just going to set a pending order at the front or the top of this order block. You can see that we do have some inefficiency just resting above, which is a must for me. If I just get my risk to reward tool, place my entry just above the order block, and I'm happy to set my stop loss just below this wick. As you can see, we've been tagged into the trade. We did experience some drawdown, but our stop loss was correctly placed to cover this wick. So that's exactly what we want to see. We have now broken structure again to the upside. At this point, I would probably remove the risk off the table or take some partials to cover my risk on this position. I'm going to set my target and I'm going to trail below 1 hour management structure and essentially see how far we can get. Spartan Trading Academy. For several months we have worked consistently to create it, and it's finally available for you. This academy will include more than 30 videos that will cover market structure, price action, chart patterns, advanced supply and demand, and much more. Check the link on the description of this video to join. If I drop to the daily time frame, they've been tagged into the trade. We essentially want to be aiming for a new daily high or high. This would be a 1 to 35 risk reward. Now this is a massive risk reward trade. This could potentially make your quarter, or even make your half a year, just taking one of these trades. Patience pays. Let's go down to the 1 hour time frame and manage it as if we were in a line position. We have our first pullback and a breaker structure here. If this was in the live markets, I would have my stop loss just under this 1 hour structure. You've got to remember, it makes no sense to manage these high time frames trade ideas behind 5 or 15-minute structure. If you've got a lower time frame trade idea and you execute on the 1 to 5 minutes, then that's absolutely fine. But if we are looking to follow daily structure, essentially break daily structure, it makes no sense to manage on the lower time frames and potentially lose what could be some huge risk reward. So again, I would manage under this low. Now, I usually manage between 2 and 5 pips below, just in case price come down to essentially mitigate anything or sweep liquidity, and just give the trade a little bit more breathing space. As you can see, we've broken structure again to the upside, and trade is now running around 1 to 20 risk to reward. Now, as we're getting closer to the target, I personally would be managing a little bit more aggressively. So now price is running at around 28%. I have just under 25% locked into the position. Let's continue to play price forward. We've broken this level of structure here with this bullish candle. I'm happy to trail my stop loss behind this 1 hour low, taking out of the position for 26.48%. Now this is a mega trade. If you are used to 1 to 2, 1 to 3 from your retail background, these types of trades are realistic if you understand the concept and the methodology. Then you will be able to build these trade ideas yourself. Anyway, hope you enjoyed the video. Any questions, please feel free to drop a comment below.